After my last video on why breaker blocks fail, many traders still ask one question: how do you actually spot a fake breaker block in real charts? Today, I will walk you through live examples most traders miss. Welcome to FXPilot, where smart traders learn to trade with precision, discipline, and market structure. In today's video, I will walk you through real chart examples of both winning and failed breaker blocks, so you know exactly what to avoid. If this is your first time on this channel, kindly like, subscribe, share, and hit the notification bell so when I post any video you can receive them directly. All right, let's go, guys. Let's look at some examples. First, we'll start with the failed trades, failed breakers, okay, or failed breaker blocks. All right, so let's look at the example on the first example will be on a USD shelf. Okay, USD shelf. I think the example is here. Let me show you. All right, so look at this. Is this not a perfect breaker? This is a perfect breaker block. But look at what happened. Now take notes. Price took liquidity. Is this a major liquidity? No, this is London high. If you want to trade during New York, wait for price to take New York high, session high. That was why if you have not watched the first video, go and watch it. Major liquidity must be taken. Okay. All right. So now look at the time. This is outside our key zone. This is outside our key zone. That's one of the reasons that made it to fail. Take note of it. Everything was okay. The breaker was there. The fair value gap was there. Momentum too was there. Okay. But the key zone and the liquidity was wrong. Let's look at another example. USD card. These are recent trades. So I just want to go through recent trades. Okay. All right. Now look at USD card. What did you see? Price. Price swept liquidity. Price swept liquidity from this low. Price swept liquidity. What happened? Now remember, if you watch the first video, I said we want to see momentum, strong displacement. But look at what price did after taking liquidity. Price lingered, showed weakness. This is a sign of weakness. Before pushing up, pushed up. Now after pushing up, if this breaker will hold, we want to see sellers weak. Sellers should be weak and not a strong momentum again. So this is a red flag. This is another sign. So anytime you're taking a trade and you have marked out your breaker block like this, look at the strength of sellers if you are buying. Okay, buyers later pick up, but look at the strength of sellers. So this is a red flag, and that's why it failed. Okay. All right, let's look at another example. I don't want this video to be too long. Let's look at another example. We are looking at failed breakers. Let's look at AUD USD. AUD USD 15 minutes. Okay, we're on 15 minutes. Now, these are recent trades, and I have marked out this trade so that I can show you this trade. Okay, look at this. Look at this. What did you see here? What did you see? Price swept liquidity from London low. This is London. Price swept liquidity, and then what happened? It lingered, went up, did not cause a market structure shift, and then what happened again? Price similar to what happened at on a USD card. Price now blew with a strong momentum. What happened? Sellers gave another strong momentum. This is a red flag. So watch the first video I explained about momentum shift or shift in momentum. It will help you to avoid losing trades. Once you see equal momentum like this, leave the trade. Don't bother yourself. Just wait. Okay. So everything was okay. There was a fair value gap after the push. Look at the fair value gap. There was a fair value gap after the push. Okay. But the momentum was wrong. Let's look at another example on gold. We don't want this video to be too long because I have up to 10 examples. Let's look at another example on gold. On gold, 5 minutes. On gold, okay. Now look at this example on gold. Let's leave this other one. Look at this on gold. What did you see here? Although this you can still take trade here. We'll go to the entry time frame where you can take. I'll show you how you can take trade here. This will still work. It's not entirely a failed trade. But look at where our fair value gap was. Look at our breaker. Look at our fair value gap. Okay. You don't take trade outside your session, your key zone. This trade here that later played out was outside the key zone. Okay. But however, this is not entirely a failed trade. But let's go to the 1 minute. Let me show you how you would have taken 1 to 2 or 1 to 3 risk reward ratio from this trade. Let's go to the 1 minute. First, let's see. Okay, like from here. Now, remember guys, our entry model is breaker block. Our setup is breaker, our entry is breaker. Okay, now look at this. Price swept this high. Price swept this high. There was a change in state of delivery. Remember I told you that with every change in state of delivery, there's an associated breaker block. Okay, and that breaker block is our entry. Once there is a change in state, I will do a video on change in state of delivery so you understand it. These two consecutive up candle that took liquidity, there is an order block. There is an order block attached to it. So the last down candle before price swept liquidity is your breaker. Okay. So once price breaks with a strong momentum, look at the momentum. One single candle, and then look at the buy momentum. 1, 2, 3, 4. Okay, that's to tell you that momentum is to the downside. Okay, our entry will now be on this breaker. Stop loss here. Target 1 to 2. 1 to 2, or this low. And target this low because they are equal lows here. Equal low. So that's why I said this trade is not entirely a failed trade. Okay. All right, let's move to the next example. All right, so those are the few failed breaker blocks that I can spot on recent trades. Okay, I didn't want to go deep into the chart, so these are recent trades. So let's look at winning trades, breaker blocks that worked. Okay, so we'll go to Euro USD 15 minutes chart. Let's look at breaker blocks that works and why they worked. Okay, 15 minutes Euro USD. So guys, I will show you entries, but not on all because I don't have much. Once I show you the entry on 1 or 2 or 3 or 4, you should be able to know how the entry and should be able to guess or to know what our entry model is. Okay, like I said, our setup is breaker, our entry is breaker. So take note. So this is Euro USD 15 minutes. Look at price swept liquidity from this low, and then look at the momentum. This is what I want you to see. This I explained this in the first video. Look at the momentum, very big candle, took price to the upside. Now look at the return, 1, 2, 3, 4, 5, 6. 7, 8, 9, 10, 11, 12, 13, 14 candle. It took 14 to come down. So that's telling you that momentum have shifted to the upside. Okay, there's a shift in momentum to the upside. Okay, so now let's look at how we can take advantage of this move. Okay, let's look at, so now you see that price has fallen below the 830 opening price. Look at this 830. So price fell below the 830 opening price. That was why I would consider taking this trade, because we are almost out of our New York key zone. Okay, so let's go to the 1 minute. Let me show you the entry. So if you're able to understand the entry, I don't need to show you entry for all. I'll just show you the setup and show you how it works, and so that the video will not be too long. Okay, remember we did the first series, the first video, and I explained all the criteria there. Okay, so now what do you see? As price came to our zone, we want to see a change in state of delivery, right? Price swept this. There was a change in state of delivery. Okay, where is our entry? Breaker. This is our entry. This breaker. This breaker is our entry. You can also enter on continuation order block. This continuation order block, because it has a fair value gap here. So that's a good one. You can enter on this. If you change to line chart, you'll see what I'm telling you. Look at, this is our major breaker and this is the order block. So two entries here. You can enter here, this continuation order block. Place your stop loss below the order block. Our stop loss is about 1.7 pips on this. You can target this low, this high, sorry. This high, or target 1 2, because we are outside. You need to be very careful because we are outside our key zone. So I will target this fair value gap here, this gap here. Target that gap, 1 to 8. That's 1 to 8. So guys, let's look at another example. Australian dollar, US dollars, 5 minutes. Watch the first video so you can understand what we are doing here. Australian dollar, US dollar, 5 minute time frame. Look at it. This was the failed trade. Okay, so look at it. This is it. Price swept liquidity. And what did you see? Now look at what I'm telling you guys. What did you see? Strong momentum. This is what you look out for. Strong momentum. It took two candles to move this price after sweeping liquidity. Remember, if you watch the first video, I talked about market structure. I talked about liquidity. The price does not move without taking liquidity. The price only move after taking liquidity. Watch that first video. It's very important. Now, after sweeping this low, this major low, it took just two candles to take price up. Now, look at the candles that came back. 1, 2, 3, 4, 5, 6 candles. That's showing weakness. This is weakness. If you go to the 1 minute, you should be able to get your entry. Look at our breaker, and there's a fair value gap. So all the criteria here are okay. And price is below. Look at, price came below the 830 opening price. This red dotted line is 830 opening price. Look at it. That's the 830 opening price. Okay. All right. So let's move to the next example. NZD USD, 5 minutes. NZD USD. Ensure you understand market structure and then your direction. I will do a video on direction. Market structure, liquidity sweep, okay, and then shift in momentum. Understand shift in momentum. I explained it. I took my time to explain it in the first video. Go and watch the first video. All right, so look at this. Similar to what happened on AUD USD. Price swept this low. And then how many candles? One, two. Just two candles. Two candles to the upside. And then look at the momentum. Look at the sellers. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. It still came and swept. This was an inducement and swept this low. After that, what happened? After taking this liquidity on our breaker block, look at this is our breaker. Change to line chart. Look at the move. Look at the move. So now this NZD is always a night pair. Okay, I call them midnight pairs, so I don't like trading them anyway. So I call them midnight pairs. So look at the move after taking liquidity. Okay, so if you go to the 1 minute, you can get your entry. Okay, so let me check. Let's go to the 1 minute. I didn't want to check this one. I want to move to gold. And always take note, price was below my 830 opening price. This red dotted line is my 830 opening price. Okay. All right, so let's look at this. Let's look at the entry for this. So now you see this. I wouldn't have taken this because there's no fair value gap here. Remember, I told you when there is, watch the first video. When there is no fair value gap, it means it is liquidity. There's no fair value gap here. Okay. Now price came here, swept this. There was no change in state of delivery. Look at where we would have. This is where we would have our change in state of delivery. Okay, but there was no. Price came down. So all I want to see is a sweep and a change in state of delivery. Now price came and swept this and gave us a change in state of delivery. And remember, I told you that our entry is what? Breaker. Attached to every change in state of delivery, there is a breaker. So this is our entry, this breaker here is our entry. So you place your trade on that breaker. Stop loss is 1.7 pips or 1.8. You can take two pips, okay, because of spread. Now you target these highs, because these are liquidity. Now the reason why I will not advise you to take too much this thing, to go too high or to follow this high. If you follow this high, now let me show you something. Anytime you see a high like this, change to line chart. Once you change to line chart, you will see the real resistance. Those are the real resistance. Even here, those are the real. Those are the places that you place your target. Okay, so you place it on. Don't place on that week. So this is 1 to 17 risk reward. This is 1 to 17 risk reward. Okay, guys, I will show you results that I've gotten from these trades. I'm not just showing you hindsight or whatever you think it will be. I'm not just showing you. I will show you the results that I've gotten from these trades. You will see the results of these trades. Okay, I'll show you results from each of these trades that I've taken. All right, so let's look at another example. Let's look at another example. Now, if you see, look at my chart, you will just see previous day high, previous day low, and you'll see major liquidity points. It makes trading very easy and sweet for you. Okay, you see 830 opening price. Once price is below 830 opening price during New York, you know what to do. I will teach you how to use that. Okay, so the next example will be on gold. Let's look at gold. Guys, I have a bonus. I have bonus for, so just stay tuned, just stay with me. I have bonus for those who did synthetic indices. If you are trading synthetic V75, so I have bonus trade for you. Okay, it works on anything. This strategy work on anything. So those who trade V75, just keep watching. That's a bonus for this video. So let's look at gold. Gold, 30 minutes. Gold, 30 minutes. Let's look at gold, 30 minutes. That's this. Look at this. Okay, so as you can see, price took major liquidity. That's London high. It's a major liquidity pool. Price swept it. Now, after sweeping it, what did you see? Look at strong drop. This is a strong momentum. It took 1, 2, 3, 4, or 5, 6 candles to bring price to the downside. Okay. Now, price did not return. You may be asking, is there a fair value gap here? Yes, there is a fair value gap there. Let me show you. So that was the reason why I considered this trade. Look at the fair value gap. I hope you can see it clearly. This is a fair value gap. So there's a fair value gap here. Now look at what happened. Price came back, and if you can count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, almost 40 something, almost 30 something. Okay. The movement of buyers shows weakness. Just five candles to the downside, telling you momentum have shifted to the downside. But it took almost 30 something candles to move price up. And look at when price came up, it was during New York. And price was above 830 opening price. Look at this is 830 opening price. This red dotted line, price was above it. So these are all confirmations. Shift in momentum, 830 opening price. Look at now. Let's go to the 1 minute and look for our entry here. This is gold. Let's go to the 1 minute. 1 minute or 3 minutes. 1 minute or 3 minutes. Let's look at 1 minute or 3 minutes. Why I'm considering 3 minutes because I entered on the 30. The setup is on 30 minutes. So. All right, so look at it. All right, so look at this. Look at this, guys. Look at this. So during New York, price above 830 opening price. What did you see? Breaker, change in state. So sorry, this is our breaker. Is this two consecutive candles? But because this is higher than this one, I'm taking this. So as soon as price closes below this, that's my entry. That's my entry. The fair value gap is there. That's the fair value gap. So this is my entry. My stop loss will be above this guy or above the breaker. Above the breaker. Then I will target this week low, where price from rose up to that point, or this opening price. I'll target this opening price. This opening price. Okay, it's giving us 1 to 5 risk reward ratio. Okay, that is it. That is it. So let's look at one more example on silver. This is gold. Let's look at one more example on silver. Let's look at example on silver. 15 minutes time frame. There's one example there. These are all recent trades. That is there. Okay, look at it. This is it. On silver, price took liquidity, took London low. Look at what they did. They took London low. When you want to trade New York, ensure they take London low or high. Now, what did you see here? A strong momentum again. One single candle. And then look at the returning price, the sellers. 1, 2, 3, 4. telling you that momentum have shifted to the upside. Guys, go and watch that first video so you understand this thing. Momentum shifted to the upside. Now, there is a fair value gap there. That fair value gap, this fair value gap here is telling us that buyers have intention of going up. Remember I told you, buyers have intention of going up. So this is a market structure shift here. Okay, so let's go to the 1 minute to look for entry. Let's go to the 1 minute to look for an entry. Guys, these are all recent trades that I just marked out. I'll show you the results. Also show you, you see the one that I withdrew to. So I'm not just showing you trades and results. All right, so now look at this. When price came, this did not touch our zone. So it is an inducement. It's an inducement. What did you see? Price went up. Look at the momentum. 1, 2, 3. Took 3 candles to the upside, right? And then there was a change in state of delivery. Along with that change in state of delivery is our breaker. If you change to line chart, you'll see it very well. Look at our breaker. This is our breaker. So that's our breaker and that's our entry. Okay. So we box it. Now look at the candle that is returning. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So this is your confirmation that this breaker must hold. This breaker must hold. It is telling you that momentum is to the offside. No need to be scared. If you're taking this trade, you take it. Okay. Now our entry will be here on this breaker. Stop loss below here. Then we'll target any of those highs. Asian high. We'll target this Asian high. Okay. So this is giving us 1 to 13 risk reward ratio. Now I will teach you about risk management. Okay. So that you don't just use any lot size that you like. Risk management will make you make money from the market. The difference between you and professional traders is risk management. All right, guys. So now the last example will be on synthetic indices. That is derive. Those who trade derive. This bonus is for you. Now let's go to V75. V75, 15 minutes. First, I will show you a failed trade. Show you a failed trade and tell you why it failed. Remember, that's the topic we are on. Now, this is a clean setup with fair value gap, and even we have inversion fair value gap. But what happened? Price came during odd hour. Price came during odd hour and it failed. This is Asian session. We don't trade during this period and it failed. Okay. Now let's look at the winning trade. This is the winning trade. So look at our trades. This is our breaker. This last down candle before liquidity sweep. Now if you go to the 1 minute, let's go to the 1 minute to look for entry. So look at the entry. Now this is my entry. My entry, this is the change in state of delivery. This bearish down candle is the change in state of delivery. And then this is my breaker. Now if I change to line chart, you'll see it clearly. Look at this. This is my breaker. So that is my entry. Once price close below, that's my entry. Or I'll enter on this. So that's my entry. Take my sell from here, my stop loss here, and target any of this low or the open. Target this low. Okay, that's it. So let's look at another example on V75. Stay on 15 minutes. This one. Alright guys, I don't want this video to be too long. Just showing you recent trades. So price took Asian high. That is major liquidity pool. Okay. Now look at what happened. It took 1, 2 candles to bring price down. And then price rose up 1, 2, 3, 1, 2, 3, 4, 5, 6, 7. Look at it. So 7. So that means momentum is to the downside. Let's go to the 1 minute and look at the exam and look at the entry for that. Look at the entry for that. Remember I told you breaker block is our setup. Entry is also a breaker. Now look at this. Very simple strategy. You can use it to make money, okay, consistently. Now what did you see here? This is our breaker. That's our entry, okay. Price, look at what happened. 1-2 candle to bring price down, and then look at what later happened again. Look at all of this candle. Buyers struggling to push price up. That's to tell you that momentum is to the downside. So once you place your trade, you don't need to worry. So I will not enter here because this is not my key zone. I will enter during New York. Once I see a bearish engulfing here, okay, I will take this trade. I will take this trade from here. So that will be my entry. Should be my entry point. Place my stop loss above here to be safe, and then target this opening price. Target any of this opening price or the low there. Okay, you can decide to be taking 1 to 3, 1 to 4. Okay, that's it. So guys, you can see that the criteria we mentioned in video 1 is very important. The criteria we mentioned is very important. So remember, you don't trade every breaker block you see. Always check for market structure, check for liquidity, check for momentum shift or shift in momentum, and then opening prices. Price must go above the opening price or below the opening price, like 8:30 opening price. Okay, those are your confirmation before you can enter any trade. Okay, so if I should ask you, be honest. If I should ask you, which of the setup among all those setups that I've shown you looked valid to you at first when you saw it? Which of them looked valid? You can give me your answer in the comment section. Okay, you can give me your answer in the comment section. Like I said, I will display the results that I've gotten from this setup in this video. So you will see the results of this now. Look at you will see the results of this video, of this trades. You see the results. All right, so if you found this video, if you found value in this video, if you found value, subscribe to FXPilot, guys, and turn on the notification bell, because here we focus on smart trading. I'm going to reveal secrets to you, secrets that most mentors wouldn't want to show you. They will not want you to know. This is to help the society. I'm doing this to help the society. I will reveal secrets to you, guys. I will reveal secrets. So in the next video, guys, I will teach you the engulfing and CROT strategy that I have been using to make consistent weekly profits. Don't miss it. Don't miss it. Like I said, in the next video, I will teach you the engulfing and CROT strategy that I have been using to make consistent weekly profits. And you can see some of the profit. I will display it for you to see. So don't miss the next video. If you have questions, you can ask me in the comment section. Okay, I hope you enjoyed this video. I hope you enjoyed this breaker block strategy. It works very well, but you need to look at the criteria I mentioned in video 1. Watch video 1. Okay, ensure you watch video 1. Thank you very much.